Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Phibro Animal Health Corporation quarterly report. Phibro Animal Health Corporation offers a diverse range of businesses and services across various industries. The company operates through three main segments: animal health, mineral nutrition, and performance products. The animal health segment provides products for food and companion animals, including poultry, swine, beef and dairy cattle, aquaculture, and dogs. These products include antibacterials, anticoccidials, nutritional specialty items, vaccines, and vaccine adjuvants that promote animal health and performance, ensure food safety, and improve animal welfare. The mineral nutrition segment offers formulations and concentrations of trace minerals such as zinc, copper, manganese, iron, and other compounds to fortify the daily feed requirements of livestock's diets. This helps maintain an optimal balance of trace elements in animals. In addition to these core offerings, Phibro Animal Health Corporation also develops, manufactures, and markets microbial and bioproducts for various applications serving animal health and nutrition, environmental, industrial, and agricultural customers. The company provides specialty ingredients for use in personal care, industrial chemical, and chemical catalyst industries. Furthermore, the company offers its products through local sales offices to integrated poultry, swine, and cattle producers, as well as through commercial animal feed manufacturers, wholesalers, and distributors. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to skyrocket. The stock price of Phibro Animal Health Corp has seen a significant surge in the past year, leaving investors and analysts eager to understand the underlying factors driving this trend. Several key events and developments have likely contributed to this upward momentum. One possible reason for the increase is the company's strong financial performance. Phibro Animal Health Corp may have reported impressive revenue growth, expanding its market share, or achieved significant cost savings through operational efficiencies. Such financial achievements can boost investor confidence, leading to a rise in stock price. Another factor could be the company's strategic acquisitions and partnerships. Phibro Animal Health Corp may have made strategic investments in emerging technologies, expanded its product portfolio, or formed alliances with other industry leaders. These moves can enhance the company's competitiveness, increase revenue potential, and attract new investors. Additionally, changes in market trends and consumer behavior could be driving demand for Phibro Animal Health Corp's products and services. The growing focus on animal health, sustainability, and food safety may have created a favorable environment for the company's offerings. As consumers become more aware of the importance of animal welfare and environmental stewardship, companies like Phibro Animal Health Corp are well-positioned to capitalize on this trend. Lastly, external factors such as regulatory changes or industry developments could be influencing the stock price. For instance, shifts in government policies or regulations may have created new opportunities for Phibro Animal Health Corp to expand its business or improve its competitive position. In conclusion, a combination of strong financial performance, strategic acquisitions and partnerships, favorable market trends, and external factors are likely contributing to the surge in Phibro Animal Health Corp's stock price. Phibro Animal Health Corporation market capitalization of $2 billion is materially smaller than most of its industry peers of roughly $3 billion. Phibro Animal Health Corporation trades at a higher price-to-earnings ratio of 29 times and a higher price-to-book ratio of 6.82 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 79% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a review of various factors that impact an organization's financial performance. On the growth side, the acquisition of medicated feed additives portfolio from Zodis, Inc. for approximately $297.5 million was a significant contributor to revenue growth. Additionally, sales of inventory and depreciation of property, plant and equipment also contributed to growth. The animal health segment saw substantial growth across various product categories, including MFAs and other, plus 34%, nutritional specialties, plus 12%, and vaccines, plus 18%. The mineral nutrition segment also experienced a 10% increase in revenue. Geographically, the United States, Latin America and Canada, Europe, Middle East and Africa, and Asia-Pacific regions all reported growth, except for Asia-Pacific, which saw a decline of 2%. On the other hand, the performance products segment declined by 11%. Lower demand for ingredients used in personal care products also contributed to revenue decline. Furthermore, cash used in the ordinary course of business from changes in operating assets and liabilities was another factor that impacted revenue negatively. Net income experienced a significant increase between 2024 and 2025. For the 3 months ended 2025, net income rose by $24,274 to $27,459 compared to $3,185 in 2024. This trend continued over 6 months, with an increase of $43,826 to $53,986. Profit margins also showed improvement during this period. The gross profit margin for the 3 months ended 2025 increased from 33.1% in 2024 to 35.4%. Operating income margin saw a more substantial jump, rising from 8.2% in 2024 to 13.5%. The reasons behind these changes are multifaceted and varied across different business segments. Revenue growth, improved operating efficiency, and cost control were key factors contributing to the increase in net income and profit margins. In specific areas such as animal health, increased sales, favorable product mix, and higher average selling prices contributed to the improvement. Similarly, mineral nutrition saw a boost due to increased sales volume. Overall, these changes indicate a positive trend for the company's financial performance, driven by various factors that have led to improved revenue and cost management. The company's financial performance indicates a strong ability to generate positive operating cash flow. This is evident from the significant amounts of net cash provided by operating activities, totaling $28.7 million. Furthermore, the operating cash flow for June 30, 2025, was a substantial $77,039,000. These figures demonstrate that the company's operations are generating sufficient cash to support its business needs and investments, indicating a healthy financial position. The company's financial health has undergone significant changes in terms of its debt level and interest expenses. A notable increase in debt level is evident from the current portion of long-term debt, which rose from $16,250,000 to $20,638,000. This surge can be attributed to new credit facilities and financing for an acquisition. The impact of this increased debt on the company's financials is also substantial. Interest expenses have seen a considerable rise, with a 28.5% increase in 6 months ended December 31, 2024, from $8,996 to $11,756. Furthermore, interest expense has increased by $2.8 million, 24%, from $9 million to $11.8 million. The acquisition appears to be the primary driver of these changes, with higher average debt levels contributing to a significant increase in interest expenses of 43%. These developments indicate that the company's financial situation is becoming increasingly reliant on borrowed funds, which may have implications for its future performance and stability. The performance of various segments and regions within the company has been mixed. In terms of segments, animal health and mineral nutrition have performed well, with notable increases in operating income, net sales, and adjusted EBITDA. Specifically, animal health saw a 26.4% increase in net sales for 3 months ended December 31, 2025, and a 39.3% increase for 6 months ended December 31, 2025. On the other hand, performance products has underperformed, with a decrease in net sales of 9.7% for 3 months ended December 31, 2025, and 8.5% for 6 months ended December 31, 2025. In terms of regional performance, all regions except Asia-Pacific have shown increases in net sales. The United States, Latin America and Canada, Europe, Middle East and Africa have all seen growth, while Asia-Pacific had a slight decrease that is not deemed significant. Management is optimistic about the company's future prospects, citing several key drivers of growth. The acquisition has expanded the company's product offerings in medicated feed additives and water-soluble products, creating new revenue opportunities. Additionally, the Phibro Forward initiative aims to unlock additional areas of revenue growth and cost savings. The animal health industry is expected to continue growing due to global population expansion, middle-class growth, and productivity improvements. The company is also focused on defending its Carbodox product against FDA regulatory actions and obtaining therapeutic indications for its virginiamycin product in Brazil. To drive growth, the company will pursue various initiatives, including Phibro Forward, income growth initiatives, and expansion of production capacity and productivity improvements. Management expects adequate liquidity for at least the next 12 months and is committed to complying with debt covenants based on their operating plan. In terms of shareholder returns, the company intends to pay quarterly dividends subject to board approval, contingent upon results of operations, financial condition, capital requirements, and other factors. Overall, management strategy focuses on driving growth through product expansion, operational improvements, and strategic initiatives. Concerns about inventory buildup and supply chain disruption are evident in various sections of the report. On page 16, it is noted that the value of inventory has decreased due to final inventory receipts and net working capital adjustments. This suggests that there may be an issue with managing inventory levels. Furthermore, on page 19, it is reported that inventory levels have increased significantly across all categories, including raw materials, work in process, and finished goods. This could indicate a potential problem with supply chain management or production planning. Additionally, pages 33 and 49 highlight external factors that could disrupt operations and supply chains. The ongoing conflicts in Israel pose a risk to supply chain and logistics, while outbreaks of animal diseases could reduce demand for products or affect the availability of raw materials. Indirect mentions of concerns about inventory buildup or supply chain disruption can be found on pages 28, 38, and 50. These references suggest that foreign currency fluctuations, large customer purchases, and changes in trade policies could all impact inventory management and supply chains. Overall, these findings indicate a need for careful monitoring and planning to mitigate potential disruptions. That concludes the financial summary for Phibro Animal Health Corporation. Feel free to comment below, and I will be happy to answer them when possible.